Welcome to the 10th episode of Made in India, a podcast where we explore various Indian businesses, uncovering their fascinating stories and insights for business enthusiasts like you. In this episode, we dive into the story of India's largest maize processor, Gujarat Ambuja Exports Limited. What began as an oilseed processing business has over the last 3 decades transformed into country's maize processing powerhouse. Today, Gujarat Ambuja Exports operates at a massive scale with its products that quietly find their way into what we eat, the feed for our livestock, the medicines that we take, and even the cosmetics that we use. From starch and sweeteners to nutraceuticals and specialty chemicals, GAEL extracts value from each kernel, serving customers in over 120 countries. Joining us for this conversation today is someone who needs no introduction in India's investing circles, Mr. Saurabh Basrar. This episode is very close to my heart because I personally have had the privilege of working with Saurabh sir for a few years during my career. With over 15 years of investing experience, he currently manages a multi-cap PMS at Banyan Capital Advisors and advises investors and family offices on building robust public market investing frameworks. He is also a co-author of the book Masterclass with Super Investors. This book has enriched investing processes for countless serious investors across India. A CFA charter holder and a member of the ICAI, Saurabh sir brings both depth and perspective to the table. Today, we talk about India's place in the global maize market, the intricacies of maize processing value chain, the story of how we discovered Gujarat Ambuja Exports at the first place, the journey of the company as to how it scaled into becoming a giant that it is today, and much more. So sit back and enjoy this deep dive into Gujarat Ambuja Exports business right here on Made in India, powered by Bastion Research. So, first of all, before starting the conversation, sir, thank you so much for taking the time and agreeing to do this episode with us. Since a long time, we wanted to have an episode with you. So now that I'm glad that the time is, arrived. So thank you so much for being on the show, sir.
Thank you, Naved. It's a pleasure to be here, and I hope this will be worthwhile for everyone and sort of add value to, in some manner, what they would expect out of it.
100%, sir, 100%. So, sir, before getting onto the company that is Gujarat Ambuja Exports, let me give a standard disclaimer, which is very important for all our listeners to understand. So, all the information that is going to be shared on this podcast is purely for educational and informational purpose. There is no motive of providing any sort of investment advice here. So, viewers, please be informed that in case you decide to act on any information that is shared on this podcast, please do thorough due diligence and also, consult your financial advisor if you have one. Also, another thing to keep in mind is that the guest, the host, or entities with which guest and the host are associated may or may not maintain positions in the securities of companies that are discussed in this show. So, I think with that disclaimer, sir, I would start with the first question. So, initially, sir, at a very basic level, what I want you to help us understand कि how does Gujarat Ambuja Exports make money? मतलब कहाँ से पैसा बनाती है company? So we can set the tone right and build on from there.
Okay. So, Gujarat Ambuja Exports has three lines of businesses. The first and the biggest line for them is maize processing. In simple terms, they buy maize, which is corn, also called corn. They process it through a wet milling process, and then they convert that maize into starch. And that starch is further also converted into some other value added derivatives. And then the starch and the derivatives are used in various industries, right? So that's the first business. The second business is agro, wherein they process soya beans, right? Or sort of the oil seeds, but largely soya beans. And then again, after that, they take out soya oil and also de-oiled cakes, which is used for animal feeds and sort of other purposes. And the third business is, which is a very, very small business for them. They have a very small sort of a spinning business wherein they make yarn, largely cotton yarn. But that's like a legacy business. So that's a very small part. So these are the three broad businesses that they have.
Okay, so if we want to rank, let's say largest to smallest, smallest will be yarn processing, and amongst the other two.
Amongst the two, maize processing is the largest. So maize processing would be contributing close to almost now 99% of the profits, right? And in terms of top line, because the agro business has a largest top line, but it doesn't really contribute that much. Let me just look at that. So maize processing is close to about 3,400 crores, while agro processing will be in the range of about 1,500 crores. But in terms of profits, or let's say on the operating margin side, almost all the profits come from maize processing.
Okay, so maize processing is the most important business for the
Correct.
company, and
Correct.
noted. So, sir, let's keep Gujarat Ambuja aside for a couple of more questions. So, what I want you to now help us understand is some nuances of the industry, right? I want to understand the industry landscape because maize processing being the most important segment for the company. Uh, can you help us understand the positioning of India because maize is a crop and India is an agrarian country. So how is India, positioned in terms of maize production versus maize consumption? Do we produce enough here?
The fifth largest maize producing nation. So just in terms of number, we are producing close to about 35 million tons a year, right? And the top four are US is the largest with about 350 million tons, followed by China at 272, and then Brazil at 109 million tons, and Argentina is at 59 million tons, right? So we are the fifth and much relatively very small compared to the top two or three. Now, out of this 34 million tons, a large part of maize in India is consumed in poultry and poultry feed. Then uh, some part is used for starch and derivative manufacturing, right? And now in the recent past, some part of maize is also being diverted towards ethanol production. So these would be the large three uses of maize in India. The maize production in India has increased from about, let's say, 28 million tons in the last 2, 3 years or 3, 4 years to about 35 million tons now. So this is how sort of we are largely stacked. India produces non-GMO corn maize, which means the GM genetically modified corn is not allowed in India. So those seeds and that production is not allowed, while US is the largest producer of GMO corn. So only non-GMO corn import is allowed, but also against exports. So let's say a starch manufacturer can import that, but against that you'll have to show exports, right? So import of corn is not freely allowed into India, you could say.
Okay, so this indirectly tells me that we are producing enough corn that in comparison to what we are consuming. Is that understanding correct?
Yes, that understanding is correct.
Okay, okay. So now the next one which I want to understand is the value chain. How does the entire value chain work, right? From uh, uh, let's say from the step where maize is cultivated to the end product, which let's say players like Gujarat Ambuja exports are selling. How does the entire value chain work? If you can, help us understand that.
So from the production of maize, which is done by farmers, the maize is uh, purchased by companies like Gujarat Ambuja or other starch manufacturers. We are talking about the starch business here, right? And
Yes, yes.
then they process that in the production facilities and they convert that into starch or starch derivatives like you have maltodextrin, you have liquid glucose, you have dextrose monohydrate powder, you have maltitol. So these are sort of various derivatives which are further used across different industries. Now, largely it's a B2B business wherein industries like FMCG, paper, textiles, you have pharmaceuticals. So across these and more, so starch and the derivatives are used.
Understood. Sir, you alluded to a particular technical term, wet milling process, I think, in one of your previous answers. So can you help us, understand shortly and briefly what is this wet milling process and what does it include, basically?
Okay. So wet milling process is wherein you process maize and use water to separate different parts of maize into the different products, right? So
Okay,
basically, in terms of separating the kernel, right, into starch, oil, protein, and all. So that's the process.
understood. So it's a complete process where, let's say, maize enters from one side, there is water which, separates various output from that particular, small kernel,
So
and
yeah,
then
it's largely a process in terms of how the maize is processed.
okay, understood. Understood. So again, come back to Gujarat Ambuja exports, and now I want to talk about your, process or how you came across Gujarat Ambuja. So what I want you to help us understand is key. What was the situation which led you to discover Gujarat Ambuja exports? And secondly, and most importantly, what was that particular aspect or that particular characteristic which sparked interest ki okay fine, I want to go ahead and dive deep into this business and understand this business and from an investor's point of view.
Okay. So actually, I was reading about sort of something to do with the starch business somewhere. I don't recall very exactly, and that's where I sort of read about Gujarat Ambuja exports. So when I actually looked at the numbers, because it's a listed company, I thought let me look at it. So numbers were extremely volatile in terms of margins were low. There was nothing majorly happening on the sales side and all. So that was my first sort of experience, and then sort of I sort of left it. When I again after some time revisited it, I actually thought let me just go a little deeper in terms of looking at the segments, different businesses that they are in. So that was where I was surprised because if one looks at the maize business separately and the agro segment separately, then it's a very, very different thing because the maize business margins are much higher and non-volatile. They're not very volatile. So largely means they have ranged between, let's say, 8 to 13, 14% on the operating margin side for a very long time. While the agro business is more like a commodity business wherein they make money or they don't make money and there's no visibility on that, right? So every year, every quarter, you really don't know how things will be. While maize is a much more consistent business. So that was the point of interest.
Okay, so there was one business which was volatile and there was another business, so the more stable piece is what
Correct.
led you to
And when
okay.
you look at the company, just look at the overall numbers, you can't really make that out because sort of it gets hidden in the overall things, right? In terms of when you look at the overall revenue and the margin profile.
Hmm. So just out of curiosity and not related to Gujarat Ambuja, this is the kind of structure you see in a lot of Indian businesses where one business is basically sometimes making money, sometimes not making money, but there is another part of the business which is really something where value lies. Uh, but still companies continue to have that kind of a combined structure. Why do you think, that kind of thought process is something the promoters operate with at the first place? Just out of curiosity, I'm asking.
It'll be difficult to give a overall sort of or a blanket sort of answer to this question because it'll be depending on the context, right? So if a company has multiple segments, but the company is incrementally putting majority of the capex onto segments which have high ROE or sort of growth profile, or which are better businesses, let's say on all fronts, then I think it's a good thing, right? Because gradually those businesses will become much bigger part of the business, and let's say that smaller businesses will become smaller, right? But where this is not the case, then obviously you have to think that why is that happening? Because then obviously that's not the sort of from a capital allocation standpoint the best decision.
Perfect. Perfect. Now, coming back to Gujarat Ambuja. So, sir, what I want you to help us understand is the journey of it, since you have been tracking this company since a long period of time, right? Uh, can you help us understand the entire journey right from, inception of Gujarat Ambuja, how it started, and how it has become right now? What have been the major, milestones for the company? And if you can spend some time on, these milestones as to why this step was taken and what has it resulted into in the bigger picture that we see today. So that is something I want to know, sir.
Okay. So I've been tracking this business for, let's say, the last 8, 9 years. So before that, also, I only know sort of through whatever publicly is available. So the company was started back in 1986. It was a small company. Initially, they were largely into agro processing, plus they had small sort of spinning business. And I think largely they got into maize in a serious manner in 2000, let's say between 2005 2010, sort of that period. And post that, all the incremental investments largely happen in the maize business. Right. So when I started looking at them, the scale of the company was, I think it had a 2000 ton per day processing capacity, and they were putting up the first big plant, which was 1,000 ton per day. So they were effectively increasing their capacity by 50% from 2000 to 3000. It was a large capex at that point of time. So what got me interested was that kind of a capex they were doing. The maize business was a much more stable business in terms of cash flow, in terms of profits. So that's what got me interested. Now they are almost at 5,000 tons per day. I think by in another 1 year they'll increase it to 6,000 tons per day, and they are the largest now from a market share standpoint. Plus, they have done very well in terms of increasing derivative capacities across their plants, wherein they sort of convert starch into the derivatives that we spoke about earlier. Uh, Now, another thing sort of is that when I started looking at them, the balance sheet was such they had some sort of debt and a reasonable amount of working capital also. So I don't recall the numbers now because it's been some time, but the debt was a reasonable part in the balance sheet. And every year also there used to be some seasonality because during the start of the season they had to buy more crop and like sort of other agro companies. But in the last 8 years, they have used all the cash flows effectively to strengthen the balance sheet, wherein today at a much larger business, right, they have virtually no debt and they have almost close to about 1,000 crores in cash, which they would be deploying partly towards their capex and working capital needs. So what I want to highlight is the company has been able to transform the balance sheet in an amazing manner over the years, and they largely do not sort of rely or take much debt, which again is a sort of a positive. At least they have the ability to take debt if there's a requirement, but largely they are self-funded.
Perfect. So what we right now see as a maize processing company did not start as a maize processing company at the first place. Instead, it started as an, agro processing company,
Agro.
which is currently bleeding money. And over the years, it has, changed its nature, put money towards the right segment and scaled that up sort of. Right. So, sir, you mentioned there are two segments. One is your agro processing, second is the maize processing, which is the larger segment, more important, profitable, constantly profitable, I would say, segment. So, can you just help us understand what kind of products the company manufactures here? You gave some names, they are technical in nature, but if you can help us understand with the help of, the end consumption. So, I think that would be something which is easy for a normal person who does not know about the business much to understand कि टेक्सटाइल सॉरी एग्रो प्रोसेसिंग में कौन से प्रोडक्ट्स कंपनी बनाती है एंड मोर इम्पोर्टेंट सेगमेंट विच इज द मेज वन उसके अंदर कौन से प्रोडक्ट कंपनी बनाती है सो जस्ट ट्राइंग टू गेट डीपर इनटू both the segments so that we can understand the business
Okay.
better.
So to my understanding, like in agro, they do soya processing. So they make soya bean oil, right? Which is again the oil that is used. And then when you process soya bean, you also generate de-oiled cakes, which are used into animal feed, right? So that's that part of the business. On the maize side, see the starch is used across. So if you look at a lot of these FMCG products that we eat, let's say corn flour, a lot of other things also. If you look at the ingredients, a lot of places you'll see stuff like cornstarch, you will see liquid glucose, you will see maltodextrin across, right? So basically, you pick up any label. So these are also used as binders, and these are also used to, I think, change the thickness or the viscosity in terms of the products. And then in terms of pharma, in terms of textiles, paper, again, sort of they are used in the production process there, the starch.
Perfect. Okay. So these kind of, when you explain it, it sounds like Gujarat Ambuja Exports is a company which procures commodities from somewhere, process commodities, and sell products which do not sound, value added or extremely uh, complicated in nature. And in just trying to put it in layman terms, and what normal understanding is key, margin is where value addition is, and I think that's the right understanding as well. So sir,
Correct.
just want to press that aspect a little bit key. Where is the value addition here, and what is something that is helping the company bring those margins that it has been able to do so far?
So my understanding is, so one is the scale, right? Historically, maize processing businesses were running plants ranging from, let's say, 100 to 300, 400 tons per day. So Gujarat Ambuja, after it set up 1,000 tons per day capacity, and sort of now the plants are almost like 1,000, 1,500 or 1,200 in that range. So there is a big change in terms of the scale of business, right? On a small scale, you can't have that kind of efficiency vis-a-vis larger scale. Second, I think it comes down to also how your procurement process is, because you have to buy huge quantities of corn, right? To be able to buy them at a reasonably, let's say, effective price, get the right quality, and sort of get the product to run your factories. That is also an important factor. And third would be how effectively are you processing, right? Both in terms of quality, consistency, and third would be availability of products to the client. So basically, they work with a lot of these large FMCG companies wherein you have to get your product certified before sort of it starts, they start buying it on a regular basis. So those certification processes do take some bit of time. So it's not like if, let's say, Hindustan Lever or sort of Marico is buying some product, so tomorrow someone says, okay, I'll sell you for 2 rupees cheaper, they'll just move, right? So there is a certification process there also. So that also takes time, and sort of for that, a company has to be able to show that it is able to provide the product of the quality and do it consistently.
Consistency is where you believe the value addition lies, and since this product is supplied to major players who are FMCG brands in themselves, they are ready to pay they're ready to pay a certain premium for this product, and therefore Gujarat Ambuja Exports is able to make these kind of margins, is the understanding here.
So I think it'll be partly a mixture of scale, right? Because you are doing it at scale, you are doing value addition in terms of derivatives, the kind of clients that you sell to, and fourth would be to be able to manage those operations efficiently to be able to derive those margins. Yeah.
Perfect. Understood. So, sir, again, taking cues from your previous answers, you mentioned that there is some part of corn which is produced in India, and now it's getting diverted towards ethanol. And I think in the latter part of 2024, Gujarat Ambuja Exports also announced some grain-based ENA facility and an ethanol plant at their Malda facility. So, sir, if you can help us understand what's the game plan here, and how substantial can this business become, and is this addition of business uh, holding the potential of driving margins even higher in your understanding?
So Gujarat Ambuja Exports, they started looking at making ethanol from corn, I think almost like 6, 7 years back, right? They again, this is to my understanding, then I could be sort of incorrect. They did look at the opportunity, but they haven't really done anything around it. Right. So I don't think so there's any plans as far as the company is concerned in terms of getting into ethanol or sort of processing corn to manufacture ethanol. I think largely because that part of the business for them is very, very dependent on the government and the
Mm.
policy. So they don't want to maybe expose themselves to sort of that much uncertainty as far as the government policy is concerned.
So this is just an optionality that the company has opened up for itself
So they've
and
been
may or
looking
may
at
not.
it for a long time, but I don't think so. They might have sort of considered it, but they really haven't put any money behind it or in terms of set up any plant to actually manufacture ethanol.
Got it. And sir, again coming back to products, you mentioned uh, they buy corn, they process it, and whatever the derivatives that come out are used at specific places. Uh, and FMCG companies are, one of the largest clientele, if I'm not wrong. So, I mean, what is the end use for of these products for FMCG companies? Can you help us clearly understand that कि अगर गुजरात अंबुजा एक्सपोर्ट किसी FMCG कंपनी को आ, एक प्रोडक्ट देता है तो FMCG कंपनीज उसको कौन से स्टेप में कहाँ पे यूज करती है एंड हाउ इज इट हेल्पिंग देयर प्रोडक्ट बिकम व्हाट दे आर राइट नाउ?
So one, I think FMCG company, this is just like a usual ingredient for the end product, a starch
Okay.
or a
Okay.
starch derivative, right? So some of the examples, right, where starches are used in FMCG products will be, let's say, your custards, ice creams, ketchups, dips, mayonnaise, sort of fillings, and there are a lot of other ones
Yeah,
also.
yeah, yeah. Okay, so the kind of texture that we see of the products and the kind of sweet taste that we have is because of this product. Is the understanding correct?
To some extent, yes. Yeah.
Okay, okay. So what Gujarat Ambuja exports gives to the FMCG product is basically helping the end product have that particular texture and maybe a slightly sweeter taste.
Yeah.
Perfect, perfect. So, sir, again sticking to revenue and talking about a much less important business, which is the textile business. Now, you mentioned that it's a very small business, it's a spinning business. Companies not investing any kind of money there, in my understanding. So, I mean, why are they not having this business off? What is the thought process in your understanding? Why are they still keeping that business inside Gujarat Ambuja?
I think the spinning business is a legacy business. So one of the plants in Gujarat where they have this business, the spinning business, also has a starch production facility or maize processing facility, and it's a combined thing. So I think that
Okay.
is the reason it's very difficult to hide that off, given it's a single sort of facility, sort of combined together in a way. That's my understanding. That's the reason they have been sort of able to hive it off separately. And maybe at some point of time, they might look at maybe closing it down if it continues the way it is.
Understood. So I think we have discussed, in fair amount of detail regarding the revenue side, how the company makes money, what are the products, what is the end use of these products, um, what is, the role of a small business like textiles. Now I want to move to the other side of, the business, which is costs, right? So, sir, for starters, I mean, initially, can you just help us understand कि एक मेज प्रोसेसिंग का बिजनेस अगर किसी को रन करना है, what are the major costs involved? Those, 4 5 top line items which constitute 75 to 80% of total cost, so that we can understand कि क्या costs है जो company के लिए major है and in running the business that they are running right now.
See, the major or the largest cost for maize processing will be the cost of raw material, which is maize, right? And obviously, then there are costs associated with the production process. Manpower relatively is a smaller cost in this business. So that how it sort of works. Now for Gujarat Ambuja, since they have two different businesses, maize and agro, and they do give segmental information, but the profitability at operating level is given. So it's difficult to figure out at a gross margin level how sort of the two businesses separately on a gross margin level work from a reported number standpoint.
Okay, so major cost is the raw material cost, and then there is power and fuel also a major part of this?
Power and fuel, yes, will be a reasonable cost as well.
So it's raw material, power and fuel, and maybe then all the costs that will be following, like employee cost, etc., etc.
Yeah.
Perfect. So you mentioned about Gujarat Ambuja's scale in your previous answers, and you also mentioned that India produces enough corn crop to be consumed captively. Now, for a company that is operating at such a huge scale, I think 5,000 tons per day is what you mentioned. Procurement is definitely something which is of huge importance. So, can you help us understand uh, how is Gujarat Ambuja Exports managing its procurement process? Is it that the company has strong connects with farmers, large farmers? Is it that the company, goes through the mandi route or dealer route? How is the procurement taking place on such a large scale?
Yeah, I would not know the intricacies, but my sense is that they use all of these. So
Okay.
just to give you a sense, now at 5,000 tons per day, so Gujarat Ambuja has plants across all largely the major maize producing and consuming centers. Let's say whether it is Gujarat, Bihar, MP, Karnataka. Now, the advantage that they have is since their plants are located in different regions, they are able to procure maize relatively easily. One, they are also de-risked that if there is a bad crop in one region, it does not affect the pan-India operations to that extent, right? Third, they are able to process and sell maize and the starch and the derivatives locally from their plants to sort of the consumer in that vicinity, right? So from let's say availability and your transportation cost, there's that advantage also.
Okay, so what you're trying to explain is key, since the company has plants at various places in India, they are able to locally procure crop, and that is that is helping them to diversify. Let's say if some region in India has a bad season, the other plants are running in a
Right.
proper way because those regions have had a good crop. Maybe the production can be increased at that plant, and they can make up for the loss at this plant. At the same time, they are also benefiting because of this kind of setup in terms of the freight cost, which is freight inward. Okay. So, sir, uh, so this is a Kharif season crop, maize, right?
Right.
And there will be, like any other, agro processing business, I'm sure there will be a particular season, maybe a few months or a couple of months in which major part of procurement, would be taking place for Gujarat Ambuja. And then throughout the year, what you do is you just use that inventory to process and then create end products, because the demand for the end product will be round the clock. I mean, throughout the year, but the procurement takes place only for a couple of months. So there is a working capital gap, which is something I can see here. So how is Gujarat Ambuja Exports managing that working capital gap in order to maintain that kind of a healthy balance sheet, which you mentioned initially?
So now on the maize, now you have a large part is in Kharif, but Rabi also there is a decent crop, right? So there are sort of almost two cycles now, and Gujarat Ambuja also keeps a large part in terms of inventory. My sense is they keep almost like 50,000 to a lakh ton inventory, which is much larger than sort of other players. So to that extent, they also have that advantage. And I think yeah, they're managing their working capital relatively quite well. I think they would have about 700 crores or 750 crores of inventory, right? So that's almost like on a 3,500 crore sales, like 20%.
Interesting. So how will be the working capital cycle in terms of days? Let's say if I have to do, I think 3,500 crore revenue is what you mentioned initially. So to do that 3,500 crore revenue, how much of working capital do I require? 700 crores inventory, and there could be some receivables and payables as well. So
Right. See, again, the issue comes that because there are two separate divisions, right? And sort of inventory is also needed for, to some extent, for agro. So it'll be very difficult to sort of break it down between maize and agro from reported numbers.
got it. And sir, also, if you want to understand the unit economics, for example, let's say for 1 ton of maize, uh, how much you know ton or kg of starch is something which I can create as a converter. Can you help us understand that kind of unit economics
Talking
also?
about the input-output ratio,
Yes, yes.
right? So it's about 0.65 to 0.67. So 1 kg of maize will produce about, let's say, 0.67 kg of starch.
Understood. Got it. And the rest 40% is waste, which is going into, so that generates no revenue, right?
So in terms of, there are some, you have some byproducts also in the process which are sort of used.
Perfect. So, sir, if we look at the segmental breakup of Gujarat Ambuja, there is maize processing, there is agro processing, there is textiles, which we have discussed, and there is a small segment of power as well. And if I connect with the answer that you gave regarding power and fuel cost being a major cost item, what I'm able to basically connect here is the company has established certain captive power capacities which is helping it run its operation, and
Right.
then there is some surplus power which is getting generated, which is getting sold, and that is coming as a part of revenue of this segment. Is that the correct understanding, sir?
So power, I think large part of that power is they sort of in a way consuming, right? So power again is not, rather than looking at a separate business, you can sort of take it as part of the overall either maize or agro processing, wherein they are sort of largely using that.
Understood. So power is basically for captive consumption is what they have installed, and whatever extra is generated
Yeah.
is okay. Sir, if I look at the long-term sort of trend of gross margin for Gujarat Ambuja, I can see the number ranging from 17% to 28%. And what I am able to,
In terms of gross margins here.
gross margins, yes. So, is this because of the commodity procurement that the company has to take place? I mean, that the company has to take care of, or is there some other factor which is driving this? Because this is a wide range, 9%. So, what explains this volatility, if I have to use that word, in gross margins?
So I think the volatility in gross margin is because the gross margin is combined for both the segments, maize and agro. While
Hmm.
agro is more a commodity business, right? So at a gross margin level, it'll be very difficult to figure out what's what. A better thing will be look at both segments from an operating margin standpoint
Right.
over a longer term. That'll sort of give you the sense about the quality or let's say the strength of the business.
So, sir, what will be the, let's say, last 7-year average or a 10-year average in terms of operating margin in the maize business versus the agro business? Can you just help us with the number?
My sense will be the maize business broad range will be anywhere between, let's say, 9% to 13% on the operating side, while the agro business could range on an average between, let's say, 2 3% ballpark. So that'll be the range. But agro business can also have a negative year, while maize will not. And the volatility in terms of the margin in the agro could also be very high. It could be, let's say, as high as 6 7% and low as, let's say, a minus 1%, right? While maize is more sort of consistent at, let's say, on an average of 10 to 13%.
Got it. Got it. So there is a significant difference, like 2% versus 12, 9 to 13%. So, sir, if we look at the annual report of Gujarat Ambuja, I mean, we went through a few of the annual reports to conduct research for this podcast. And one thing which sort of came out uh, very distinctly is the promoter remuneration, right? To put things in context, I think promoters take away 25% of the total employee cost, or around 14% of the company's profit after tax. And if I just look at the numbers in absolute terms uh, and compare with companies where, much larger companies which are still promoter driven, those promoters also don't take away, these kind of sums of salary. Now, my question to you here is twofold. One, how do you look at this aspect in, context of Gujarat Ambuja exports? And secondly, as an investor, if you look at a company where you are able to see such large withdrawals in terms of remuneration, how do you process it in your mind, and does it bother you? Is what I'm trying to understand.
Okay. See, from an ideal standpoint, yes. I mean, it'll be great if there was moderation in that particular compensation, right? No doubt about it. Because end of the day, the promoters still own majority of the business, right? So that is where the major wealth creation for them also is coming through. That said, now if they are able, as a promoter, see, end of the day, the business has been driven by promoters only, right? They've been able to sort of transform the business in the last 10 years, but we see from a balance sheet, the business scale standpoint. Now, if they are able to do that, I think that's the more important part. Compensation, obviously, they're taking maximum possible compensation sort of allowed legally. I would still be fine with it, but yes, I'll be much happier as an investor. It was relatively moderate, right? So I think, yeah, that'll be sort of how I'd look at it.
Perfect. So now I want to talk about the capacity and the capacity expansion that the company has, done over the years. Uh, One good thing that you mentioned, and if you look at numbers, that is very clear that Gujarat Ambuja has done is they've identified the right segment
Right.
which is helping them make money, and they have continuously put efforts to expand that particular segment. And if I'm not wrong, based on whatever research we did for this podcast, we were able to see that Gujarat Ambuja Exports is the largest maize processor in Asia outside of China, right? So, going forward, uh, can you help us understand what are the expansion plans of the company? The eventual answer which I want to come to is if we look at promoters, they are not, building the company for 2 or 3 years. They are looking at decades. So if a company is investing, and if a company is investing large sum of money, you mentioned 1,000 crores of cash, which is lying on their books, which might get converted into capex later. So if the promoter is investing such large sum of money, and if the thinking is decades out, there is definitely a huge opportunity or a significant opportunity that the business group or the promoter group is looking at right now. So that is where I want to come to कि किस तरीके की बिजनेस अपॉर्चुनिटी गुजरात अंबुजा जैसे बिजनेस के लिए आज भी इंडिया में है, एंड लुकिंग एट दैट कौन किस तरीके का एक्सपेंशन अभी कंपनी प्लान कर रही है.
Let's say for over the next 3-4 years, what the company is planning to do is one, they're increasing their maize processing capacity to 6,000 tons per day. Second, they're increasing the derivative capacity across majority of their plants, which will happen in the next, let's say, 18 months. And third is they are getting into fermented products. Fermented products are again sort of using maize starch and sort of maize starch as a raw material to make. They haven't sort of given details about the kind of products that they will do, but those products largely will be import substitution. So products which are currently imported, not manufactured into India. So they are getting into that. So they are setting up some capacities there, some in Gujarat Ambuja, some in their wholly owned subsidiary. So that will also come up over the next, let's say, 6 to 18 months. But then we have to see once those capacities come up, how successful it is in terms of the production, the quality, uptake by the market. So we'll see. So, but that is something that they're looking at, which is related to their existing business of maize processing.
Okay. So two type of expansions. One is expanding the actual capacity of output, and second is the backward integration of sorts where you are trying to manufacture raw material in-house which are currently imported. Okay. And so what kind of money is required to, let's say, set up a let's say 100 tons per day capacity? Gujarat Ambuja has 5,000, but let's say just trying to understand the capex
It depends
better.
on a lot of factors, but let's say ballpark, my sense is to set up 1,000 ton per day plant, you need anywhere around 400-500 crores.
Okay. Okay. So if anybody wants to replicate what Gujarat Ambuja has done over the years, so that particular company or that particular person will have to have 2,500 crores today to establish that kind of a capacity.
I think that's one way to look at it, but I think money is not sort of capital is not the bigger constraint. The bigger constraint will be able to run that
Hmm.
operation, right? To set up those kind of capacities, to be able to manage procurement, to be able to produce with consistent quality. I think that is the bigger challenge. A lot of people who can spend, let's say, 500 crore or 2,000 crore today, let's say from an India perspective. So that's not the key aspect. This is what I sort of my understanding, right? The bigger understanding is to be able to manage the whole thing in an efficient manner.
Understood. And sir, one more clarification which I wanted to have regarding the products again. Sorry to come back to that topic. Uh, so there is corn which gets processed, starch is created. Now that starch also has certain derivatives.
So
Is
yeah, you can further process into different products like you have liquid glucose, which is like a
hmm,
sweetener. Then you have sorbitol, right? Then you have I said maltodextrin, right? So multiple sort of products which go into sort of different applications.
perfect. So, sir, if I don't know if it's fair to compare, but if I just compare this kind of a chain with a chemical company which focuses on a particular uh, commodity, goes back 5 steps, 3 steps backward, and then forward, and then what comes out is called a value-added product. So is it again fair to assume कि okay, corn is a commodity, starch is slightly value added. I mean, still more on the commodity side, but these products, sorbitol or liquid glucose or another technical name which you just mentioned, are value added products in that sense, which are fetching much higher margins to the company.
Yeah, relatively higher margin. Then secondly, in terms of they are not as commoditized like a plain starch, right?
Right. Perfect. So, sir, there is a wholly owned subsidiary of the company called Maize Sitechem.
Yeah.
I was just trying to follow the corporate announcements for the last few years, and I saw that this company was incorporated in November 2022, and the idea was to carry out some business in the agrochemical space. That is what I was able to infer from that announcement. Then later, in February 24, 25% of the stake in this wholly owned subsidiary gets sold to a company called SMAS Investors LLP. And then again, after a year in February 25, Gujarat Ambuja Exports repurchases this stake. Now I have, three questions here. First one is what is the rationale behind starting the subsidiary? That's one. Second, is this a promoter entity, SMAS Investors LLP, if you are aware of that? And third one is what is the rationale behind, selling that 25% stake and then again buying it back after a year? One thing which I want to clarify is that there is no, extra consideration which the company has paid to purchase that stake back. But just trying to understand what could be the thought process behind doing this.
Sorry. Okay, so the first question was
What is the
what
rationale
the
behind?
formation for this company? So Maize Sikkim was largely, I think, formed to take up the fermentation business,
Okay, okay.
right? To set up capacities for fermented products within that. Now, the promoter entity took a 25% stake in that, but I think there was a feedback from minority shareholders and sort of other people to the company, to the directors and all, that this is not the best practice. It is better the sort of company undertakes the business because it is a related business and within the listed company only. So let the entity be fully owned. So that's the reason I think they had to they reverse that particular thing.
Okay, okay. So this is the same backward integration business which we just talked about a couple of
Not
questions
backward,
back.
this will be like a forward
Okay.
integration, right? So basically, you use maize, which is a raw material, to process it into starch, right? And then
Mm-hmm.
starch is further processed into various sort of derivatives and into fermented products. Means
Okay.
that'll be a forward chain,
Okay. Sorry. So my understanding was wrong in the previous answer, which I summarized. So this is a further value-added product.
right?
Okay. Okay. So I'll again come back to the industry landscape. And now I don't want to talk about how the industry is doing, etc. Now I want to talk about how Gujarat Ambuja exports as the largest player in India and the largest player in Asia outside of China, how the company is positioned vis-a-vis competition. So, my first question to you is, can you highlight uh, who are the competitors of Gujarat Ambuja exports at large, uh, who have again closest business to what GAEL does?
So the couple of other businesses, both listed and unlisted, which are in the maize processing space in India, would be you have Subjit Starch. Then there's another company which got recently listed called Sandstar. You have Rocket, which is a multinational. Then you have Cargill, which is there, and there'll be some more. So, but broadly, sort of, these would be some of the companies in the same space. Now, the second largest player, to my sort of, if my numbers are correct, would be less than half or even more than that, the size of Gujarat Ambuja, right? So that'll be the difference between, let's say, Gujarat Ambuja and even the second largest player.
Interesting. So even multinational companies are much lower in scale when it comes to their operations in India.
On yeah, because I don't think they are able to operate at the same efficiency levels as sort of a Indian business, given the cost profile and all.
Interesting. And sir, just a follow up on this one. So now let's say you have to compare Gujarat Ambuja with let's say two, three other players. How do they stack up in terms of capacity, in terms of revenue? You mentioned they're half or less than half. So how is the capacity position? That's one. How are these companies positioned in terms of generating ROCs or uh, profit? How are they in terms of profitability? And also from a market share perspective, how is the market share stacking up versus Gujarat Ambuja? And what is the market share of Gujarat Ambuja exports? Too many questions in one.
So see, there's no formal data available on it, but my sense is the industry will be today at about maybe 18-20,000 tons per day overall. So Gujarat Ambuja would be anywhere between 25-30% of the industry. And sort of other companies sort of can do the numbers in terms of the capacity and also ballpark, that should be the range.
And in terms of return ratios, is it fair to
Again, it
assume
depends
that
upon each company, right? You have to look at it because, see, when companies are doing capex during that period, the return ratio would be very different from when they are operating at full capacity, right? And different companies could have different strategies around growth, around sort of the kind of product mix that they have, the kind of derivative value-added capacities versus starch capacity. So multiple things could be there. It will be very difficult to sort of paint all of them with the same brush.
understood? So, sir, I have one last question. Uh, let's say I'm asking it from on behalf of investors in the company. So, what in your understanding, since you have been tracking this company since the last 8, 9 years, you mentioned, in your understanding, what are the top, 5, 7 key performance indicators that one should track as an investor to make sure that Gujarat Ambuja Exports is, progressing on the right path?
See, obviously they are doing a lot of capex. So how that capex is going on in terms of timelines. Second would be once that capex is done, the sort of production starts, the scale up of that production. That'll be another factor. And obviously, very important factor will be how the margin profile and the growth in the maize business is. Right, both the growth and with that growth, this will be the key factor, and everything gets derived from there.
Okay, so capacity expansion is taking place. You have to track that. You have to track the growth कि भाई capacity के साथ am I able to generate business also, and lastly if I'm able to generate business I should be able to fetch the right kind of margins also is basically what I should track as an investor in Gujarat Ambuja
Right.
Exports. Perfect, sir. I think that's it. I mean, it was great. The conversation was great. I was able to clear a lot of my doubts related to Gujarat Ambuja Exports, and I'm sure the listeners will also have the same kind of feeling. Once again, I would like to, before going to the closing remarks, I would like to, repeat the disclaimer once again that all the information that has been shared throughout the throughout this throughout the course of this show is purely for education purpose. There is no motive to provide any sort of investment advice here. In case you decide to act on any information which is provided on this episode, we strongly recommend you to conduct your own due diligence and consult your financial advisor if you have one. And once again, the host, the guest, or entities with which host and guests are related may maintain positions in the security of the company, which is, the subject of today's discussion. So please be informed of that fact as well. So, sir, with that, thank you once again for taking the time, coming on Made in India. And it was a pleasure, as always, speaking to you and getting enlightened on our business.
Thank you, Navid.